Today was a highly unusual day. And despite that, we're going to stick to the script. But we want to see if the script changes because, I don't want to look into any of these things I'm about to talk about too much. But they definitely occurred. And they're definitely worth noting as just unusual things that don't typically happen. And that might just be, the market's been trading sideways, been trying to figure something out. So maybe we're preparing for some sort of move here. But I'm going to highlight the things, then we'll keep talking. So the first thing I noticed was that energy prices were up, yet the price of energy stocks was down, and not by a small margin, by quite a large margin. Energy did end up turning down slightly, but it's just something interesting to note. Another thing to start the day, bond yields were down and the market was up, and then bond yields continued to fall and the market continued to sell off. You would think after several days of falling bond yields and no indication that they are going up and the possible breaking of a trend, according to Fundstrat Tom Lee, he's not doing much today, celebrating his birthday yesterday. But regardless, that's interesting. You would think if there is going to be some sort of break in the bond yield trend, that stocks would have some sort of rally. Again, weird things happening today. Maybe there is some sort of bigger move pending. And that bigger move might be to the upside if this bond yields case ends up happening. Now, this is an area of the script that I think I want to deviate from. I don't think it's natural for bond yields to fall and for bonds to rally here. But it is possible that is the case, given that the Fed is so stimulative, looking to just buy up everything, suck up all the debt. So it is possible that remains the case. It does look like I heard some guy from Palantir talk today on CNBC about this. Some economic warfare between the U.S. and China. I think that's the case. It is possible they are talking to some fund managers on the phone and getting some fund managers like Bill Ackman to think that inflation's coming. I think inflation is coming. I'm not compelled by the transitory argument yet, and I've had no contact with China. But it's really just a wait and see. So it's possible this bond yield rise or bond yield fall is a short-term phenomenon that could allow tech to rally. But tech didn't really rally too hard today. So just an interesting market overall today. Not going to extrapolate today out too much. Definitely remaining long energy. If you see that kind of weird energy move like that happened today, definitely buy some. Good area of the market to get exposure to if you don't have it already. And definitely, if it's not a larger portion of your portfolio, I would make it so. At least for now, and at least the companies that are investing in long-term energy, like Exxon, who will likely be here well beyond the use of traditional oil. They are investing in zero and low carbon fuels that will allow us to keep a lot of the infrastructure that's in place, and they'll likely benefit from whatever happens. Energy looks like it's going to continue to tick up on a technical basis, on a fundamental basis, with the rest of the world opening up, with no indications that production is coming back online. Let's not forget, they're making pretty good money right now. Nobody's increasing production. They want to be profitable. So it looks like it's going to stay that way and rise. And consumption is going to rise as well. So these companies are good companies to own. We will see what happens. Sticking to that script, keeping my eyes peeled on yields and how that moves, and we'll see what happens. So until next time, peace out.